Here in this video, we will be getting into all of your Tesla stock breaking news today, and it seems like the biggest news yet again is Elon Musk and drama. Elon Musk is ordered to testify in the SEC's Twitter investigation. How could this affect Tesla stock? Will it affect Tesla stock? All of that and much more coming to you right now. But first, I did talk about this in the last video, and we did a deep dive on this and potentially what this could mean for Tesla and why Tesla is doing this. But just for anyone that is unaware, Tesla announced a temporary Model Y price cut in the US by about $1,000 for the rear-wheel drive and the long range. Now, there is some speculation that this price cut happened to reduce inventory of the current Model Y to get ready for the refreshed Model Y. But it does appear that Tesla confirmed there is not going to be a refreshed Model Y, at least coming to North America this year. So I think that kind of debunks that theory. But I do want to make it very, very clear. The fact that Tesla has done this temporary price cut. Most of the time, Tesla has just outright cut prices with no explanation, no temporary status around it, just kind of felt like a screw you, we're cutting prices because we want to, right? This time, they're being a little bit more diligent. I think they're trying to cut prices in a way that the markets understand. This is probably not going to hurt margins. Right? Tesla wants the best of both worlds. Unfortunately, you cannot get there. But saying this is a temporary price cut may not spark a massive sell-off in the stock like we have seen with other previous rounds of price cuts. And if you guys watched my last video, I believe a change has started with Tesla to focus more on profitability. The first step was not giving guidance, so you don't have a guidance target weighing over your head. You can focus on being profitable and let the markets figure out where Tesla deliveries are ultimately going to be. Then we just got news a couple of days ago. Tesla is looking to lay off some of their staff, which is a direct correlation to trying to become more profitable. Because let's be honest, if Tesla can become more profitable, give us higher EPS, Tesla stock will go higher no matter where Tesla deliveries are. And then more recently, yesterday, we just got news of this temporary price cut. It seems like the writing is on the wall that Tesla is going to focus more on profitability. That's going to be good for shareholders. That's good for me and you. Think about Meta and their efforts to cut costs and become more profitable. The stock went from less than $100 a year ago, 18 months ago, to over almost $500 today. Tesla stock could see some huge gains here if Tesla can boost its EPS. So I just wanted to put this front and center in the video in case you missed it. I do think a shift has happened with Tesla, and I think it's a very much positive one that will help out Tesla stock investors, at least in the near term. Now, if you're someone like me that wanted to buy Tesla as cheap as possible, I don't think it's going to get much cheaper from here, but hey, I could be wrong. That's why you want to stay tuned to the channel for the video coming out at 8:30 p.m. tonight. And I'm sure some of you guys are going to be watching the Super Bowl, but hopefully you do not miss that video because we do have big events coming this week that will move markets, that will move Tesla stock pretty dramatically. One of which is CPI coming out on Tuesday. I will give you guys my estimates and my price predictions for Tesla stock in the next video at 8:30 p.m. tonight. So look forward to joining you guys then. But on with your Tesla stock and Elon Musk. Breaking news today. Elon Musk is ordered to testify in the SEC's Twitter investigation. This is a federal judge ordered Elon Musk to testify again in the U.S. Securities and Exchange Commission's probe of his $44 billion takeover of Twitter, giving the regulator and the billionaire a week to agree on a date and location for the interview. U.S. Magistrate Judge Laurel Beeler's order issued on Saturday night formalized a tentative ruling she made in December that sided with the regulator. It says the SEC sued Musk in October to compel the Tesla and SpaceX CEO to testify as a part of the investigation into his 2022 purchase of Twitter, the social media giant that he subsequently renamed to X. Musk refused to attend an interview in September that was a part of the probe, the SEC said. The agency is examining whether Musk followed the law when filing the required paperwork about his purchases of Twitter stock and whether his statements in relation to the deal were misleading. Musk fought the SEC's bid to interview him, saying it had already done so twice, and accused the regulator of harassment. Beeler rejected the argument the SEC had authority to issue the subpoena, which sought relevant information, she said in the ruling. If the SEC and Musk cannot agree on a date and time for the interview, Beeler said she will hear from both sides and decide for them. Friction between Musk and the SEC began when the regulator sued him after he tweeted funding secured in 2018 in reference to a possible plan to take Tesla private. To settle that case, Musk agreed to that a Tesla lawyer would vet his tweets about the electric vehicle maker. The SEC sued him again in 2019 for allegedly breaching that provision. Musk had asked the U.S. Supreme Court to review the agreement, saying it violates his constitutional right to free speech. It's just drama, drama, drama. Now, these kind of investigations with the SEC can have negative impacts. They usually take a while, though. And a negative impact would be if Elon were fined like a large amount of money, like $1 billion or a couple $1 billion, something along those lines. Then Elon, he's not paid a salary from Tesla, so he would likely have to sell Tesla stock. That kind of seems like the direction we're going in, if you guys want my honest opinion, but it's not certain yet. And I'm not sure the stock is going to react to this up front, but on a final ruling, it is possible if Elon is hit with a big fine that Tesla stock could sell off a little bit on this news. Now, Tesla has lowered the down payment required to get the $379 a month starting price of a Model Y lease to about $2,500 from $4,500 last month. It seems small, but this is actually a very big deal because, a lot of people for a lease, especially when you don't have the option to actually buy the vehicle at the end of the lease, a lot of people don't want to put $4,500 down, right? There's no option to buy your Tesla after your lease is over with. You just got to give the vehicle back and get a new lease or opt to buy a Tesla outright from there. So this is actually quite a big deal. Now, we will see today if Tesla does run a Super Bowl commercial. Some of the recent actions we have seen with Tesla, reducing the price to actually lease the vehicles, reducing the price of the Model Y, which if you actually include the $7,500 tax credit, you're getting a Model Y for in the $30,000 range, like $36,000, $37,000, $38,000, depending on what variant and what specific details you get with your configuration. It could be because Tesla is expecting an influx of attention or web traffic to the Tesla website. It appears as if Tesla has sent this message in-app to people that already own Teslas that says transfer your full self-driving capability to a new Tesla. Take delivery of a new Model S, Model 3, Model X, or Model Y by March 31st, 2024. To be eligible, you must own the transferring vehicle until the full self-driving capability is transferred to your new Tesla, and additional terms do apply. And here's a video of the Cybertruck dominating an upward sloping hill with about 1.5 feet of snow, kind of combating some of the FUD out there that, Cybertrucks do poorly in the snow. I don't see it. That's just my personal opinion. It looks pretty good. This is like 1.5 feet of snow, almost 2 feet. So, not a small amount either. Ford has begun deliveries of its F-150 Lightning electric pickup truck in Europe, with the first of the units going to a couple located in Norway. Hedge funds and institutions last week placed 5,329 option trades in Tesla stock, totaling $4.66 billion, with a positive order value of 53%. Taking a look at the week ahead on the open interest side, to the calls, you do have 57.63% open interest being calls and 42.37% open interest being puts. So that's a pretty bullish ratio here. Now, on Friday, you did see volume of 65.38% to the call side and volume of 34.62% to the put side. That is almost exactly 2 to 1. So 2 times as many calls being bought compared to the puts. Tesla stock currently boasts a short interest percentage of free float of 2.92% and $15.32 billion worth of short positions. It looks like demand to short Tesla stock is falling as the cost to borrow fees are about 0.59%. We see them kind of fluctuate between 1 or 3 or 5 or 10%, especially when there's a lot of demand to short Tesla. So it looks like people don't want to bet against Tesla right now. Tesla has recently stepped up its advertising campaign in a massive way, going from running about 400 ads for a while there. We go over this every day, and they increased that to 700. The day after, increased that to 1,000, and about 2 days after that, increased their total ads to about 2,000 they're running via Google. Now, I hear it's only about $7 million for a 30-second advertisement during the Super Bowl. So I think that would make sense for Tesla to do. And I'm looking forward to really just watching the commercials of the Super Bowl. I want to see if Tesla runs an ad or who specifically is running ads as an investor. I think that's pretty interesting. And companies that do run Super Bowl ads statistically tend to perform a little bit better on our markets over the next couple of weeks following a Super Bowl advertisement. Google Trends data for the entire Tesla lineup is going higher. The Model X, the Cybertruck, the Model Y, and the Model 3. The Model 3 going from 36 to 38, Model Y going from 35 to 37, the Cybertruck going from 20 to 23, and the Model X going from 9 to 10. So things look solid over here as far as Google Trends activity, and this sharp uptick across the Tesla lineup could be due to some initial advertising efforts. As I've said before, advertising is historically not supposed to convert directly to sales right away. It's more so to, keep the brand alive in your mind. So next time you need to buy a new car, your car breaks down, takes a poopy doop, you think, hey, maybe what about the Tesla that I remember hearing about? That's what advertising is truly for. But for Tesla to never have run ads before, to start a large advertising campaign, it could lead to some boost of initial sales. But advertising is truly the gift that keeps on giving. Model Y inventory numbers are dropping from about 8,100 today, or yesterday, to about 7,300 today. Could be due to some of the price reductions that we did see over the last 24 hours, but we'll have to wait and see. Model X, Model S, and Model 3s just continue to stay pretty much where they are, with most notably the Model 3 being at some of the lowest inventory numbers we have really ever seen, sitting at about 800 total vehicles globally in inventory. If we take a look at stock twits, the sentiment for Tesla stock is bullish at 64. Yesterday, it was extremely bullish, but I want to remind you, it's the weekend. It's literally the day of the Super Bowl, so a lot of people are not talking about stocks today. Congratulations if you are watching this video. That means you are truly dedicated to your financial future and staying as knowledgeable as possible, and I commend you for that. That's exactly what I do. I watch a lot of YouTube every single day just to get various different opinions. It helps you formulate your own opinion. You should watch me. You should watch other, Tesla investors. You should watch, what money managers and hedge funds are saying, and all these different people, analysts, and come to your own conclusions. But it's no surprise that your sentiment is lower today. It's always lower on the weekends, but really the last reading we had was about 91, which was extremely bullish, and that was on Friday. Now, message volume along the same lines tends to be lower. Today it's 35. Yesterday it was 37, which is categorized as low. The participation ratio is at 39, which is pretty much the same as the 40 number that we seen yesterday, but again, a little bit lower because it is, again, the weekend. Now, Tesla stock on a technical basis, I think, has quite a decent ways to run here. The RSI just went positive. MACD just went positive. Your 50-day moving average is all the way up at $225 per share. 100-day moving average at $231 per share, and 200-day moving average at $232.61 per share. There is a gap to fill up to about 210, and then another gap you could potentially fill to about 225. Now, we'll talk about what I actually expect from Tesla for this upcoming week in the next video coming out at 8:30 p.m. tonight. I think a lot of it is going to come down to the CPI report that we get on Tuesday. You could inevitably see a broadening out of this market rally, and that would be the most healthy thing we could see at this point. And in the next video, we will be going over a price prediction for Tesla stock this week, all of your earnings you need to know, as well as your economic data. So do not miss the next video, 8:30 p.m. tonight. Come join us. It is going to be exciting. But in the meantime, your 10 and 2-year yield curve inversion is still inverted 31 basis points. So until you go positive here, no need to worry about this at all. The closer we get to May, which is currently when we're expecting the first rate cut, that's when some people might start to say, hey, the yield curve has now went positive or is starting to go positive. We could be heading into a recession. And as far as the markets, there's only about a 16% chance that we get a rate cut in March, 84% chance of a pause. For May, you're still pricing in your first rate cut, but if we get some bad inflation data, if you get, some hot economic data continuing, you pretty soon could start to not price in a rate cut in May. That's something we want to be watching for. If that gets pushed out to June, that could be near-term negative for markets. Currently, 52.2% chance of a rate cut in May and a 39.3% chance of a pause. Only an 8.5% chance of 2 rate cuts by May. And for June, it's really a toss-up between 1 rate cut or 2 rate cuts. 41.9% chance of 1 rate cut and 43.5% chance of 2 rate cuts. I personally think we're only getting 2 to 3 rate cuts max in 2024, unless something breaks, the economy takes a turn for the worst, inflation falls a lot more than expected. I think 2 to 3 rate cuts is a pretty sound bet, and that's actually a good thing, right? The longer this market can hold up without rate cuts, the stronger inevitably it will become. You don't want a market that needs rate cuts, right? That sets you up for disappointment. That sets you up for a weak market and subsequently a large pullback. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. My name's Michael Tyler. If you guys want to come trade with us live in real time, check that link out down below in the description of this video. This upcoming week is going to be a big one. So I hope you're ready. I hope you're locked and loaded and ready to go. Thank you for watching. Enjoy the rest of your day and your weekends, and I will see you in the next one.